ever wondered what happens to your money after you deposit it? Well, today we'll take you inside of the engine. Hi, Kenneth.
Hi Gertrude, how are you?
I'm good, and you?
Good, I'm doing good. Thanks a lot for having us.
It was a pleasure, and thank you for having us.
I think it's been a while, eh?
Yeah,
But
too
finally,
long.
finally we are here.
Yes.
Yeah, so happy to be here.
Mhm.
Happy to have the conversation.
Nice.
Also I know there's several questions that people are asking.
Mm-hmm.
And we're here to clarify and also just give insight into what Etica Capital is all about.
Nice,
Yes.
nice. As we get started, would you mind?
Introducing myself.
Yes.
I started speaking without saying who I am.
It's fine, it's fine. Yes.
So hello everyone, my name is Kenneth Maina. I'm in charge of investments and also operations at Etica Capital.
Mm-hmm.
I'm also part of the founding team.
Nice.
Yes.
The founding team. So we have founders in the house today. That's wonderful. So what brought about Etica?
What about Etica?
Mm-hmm.
So when I say the founding team,
Yeah.
most of us used to work in different houses.
Mm-hmm.
I have over 14 years experience. I've worked for around 3 firms before joining Etica, so a total of 4.
Mm-hmm.
So even if you look at the other people,
Mm-hmm.
they worked across the industry in different sectors.
Mm-hmm.
Most of it has been in this unit trust space, the fund management space.
Mm-hmm.
So what happens is there's some gaps that you see as you're working,
Yeah.
and you feel like if I was in a better position,
Mhm.
I would resolve this one. Or if I was in a better position, I would treat this one in a better way.
Wow.
So now when you look for like-minded people and then you
Mhm.
come together, you are
Yeah.
able now to craft the idea, and we are lucky that we're able to craft the idea, start working on it, and now we can see now the fruits of the same, since now Etica Capital is now a brand which has been in the industry for around 2 years plus.
Nice.
Yes.
So you saw the way things are being
The
run in the investment space, and you say no, and now we have Etica.
Yeah, I will give you, maybe on that one I can give you one of the pillars we
Mhm.
have, yeah?
Mm-hmm.
It's customer service.
Yeah.
So from our end customer service,
Mhm.
so we found that the industry was a bit lacking in customer service,
Mm-hmm.
or the way we have envisioned customer service
Mm-hmm.
is not as how the industry was before.
Mm-hmm.
So for example,
Mm-hmm.
if you are in the industry for fund management, you are here to manage people's money.
Mm-hmm.
When people say money is a motive issue,
Yeah.
I'm sure if I owe you money and I don't pick your call, you start getting agitated.
Yeah, true.
So for us, so what we actually now put into place is a 24-hour customer service. So we have a call center.
Mm-hmm.
There's a whole team, and it's not robotic or AI.
Mm-hmm.
There's a whole team behind that,
Mhm.
working down the clock. So
Nice.
they work. So you can contact us via call, via email, via WhatsApp, even on our social media profiles, and you
Mhm.
go to reach to us. So the team works in shifts.
Yeah.
We're doing the day shift, we're doing
Mhm.
the night shift, and
Wow.
we work even over weekends and holidays.
Mm-hmm.
So that gap was there, because now if you look at some players in the industry, people were working from 8 to 5.
Mm-hmm.
Now assume, let's say, you have an issue on Friday at 5 p.m.
Mm-hmm. I want my money.
You want your money,
Mm-hmm.
you get your money on Monday.
Wow. Mm-hmm.
And is it that one, or even if you send an email at 5 p.m., no one will respond to you until Monday morning.
Mm-hmm.
So for that we were like, because clients really, we need to give clients a place where they feel they're comfortable in how their money is being run. So in case they have a query at midnight, they can just call us, they can just text us, they can just WhatsApp. So that's one of the pillars that we're looking at, because customer service was a bit wanting. That's why for us we have a 24/7 customer service where you can even call, WhatsApp, and do everything. So that's the first part of it.
Okay.
So the other main pillar where Etica comes into play and why Etica exists was in terms of the technology aspect.
Mm-hmm.
So tech aspect is, you're here, Gertrude.
Mm-hmm.
I'm assuming maybe let's say you're coming from Yale,
Mm-hmm.
you want to open an account, and you formed a company. So
Yeah.
that made you come all the way, you drive all the way with your documents,
Mm-hmm.
you create an account,
Yeah.
and then you go back.
Oh,
The day you want to send money,
Mm-hmm.
you send money to the bank and you come with a slip all the way. So for us, we made it very, very simple.
Mm-hmm.
You will do it from your app.
Mm-hmm.
You can either download the application
Yeah.
or go to the website.
Wow.
And any client from wherever they are,
Mm-hmm.
they are able to open an account, create an account, and start investing from wherever they are in any part of the world.
Wow.
And I think the beauty of it is, as we go along, I'll just be sending you some tips, or
Yeah.
not some tips, just some random information
Mm-hmm.
of our client base.
Yeah.
So the first time we onboarded clients was in February 2023.
Mm-hmm.
So technically, as at now,
2
we are
years
like
ago.
2 years and say 2 months.
Mm-hmm.
In those 2 years and 2 months,
Yeah.
we have onboarded around 190,000 clients
Wow.
digitally.
Nice.
190,000 clients.
Mm-hmm.
And of the 190,000 clients,
Yeah.
around 10%
Mm-hmm.
they're not in the country.
Mm-hmm.
So they're able, they could be Kenyans working, let's say, Kenyans are working abroad.
True.
Could be working in the US, could be working in Qatar, could be working in So people are just sending money from wherever they are.
Mm-hmm.
Money comes and you start investing for them. So is that beauty? So you'd have told that person in the US to travel, send DHL documents here.
They have to be physically there.
To be physically there.
Mm-hmm.
And the tech platform that we have is quite easy
Mm-hmm.
and very easy to use. It's simple and easy to use.
Mm-hmm.
And what we've done is we've given the client the power to do everything on their end.
Mm-hmm.
So what I mean everything
Yeah.
is you can create an account.
Mm-hmm.
You can invest via the app.
Mm-hmm.
You can send instructions even withdrawing by the app without talking to anybody.
Nice.
You can upload your documentation on the app.
Mm-hmm.
You can edit your beneficiary details on the app.
Mm-hmm.
We're even taking it to the next level,
Yeah.
whereby you'll be paying even your pay bills from the app, from the money market fund.
Nice.
Straight into, you pay from your fund and you get the confirmation message.
Mm-hmm.
So you see that bit of technology
Yeah.
is what we are trying to look at. The first two core pillars
Yeah.
was number one, customer service.
Mm-hmm.
We have 24/7 customer service,
Mm-hmm.
and then the tech platform.
Nice.
The tech platform easy to use, and the client can be able to do so much on our tech platform.
Mm-hmm.
So that thing that we actually work with is
Yeah.
transparency.
Mm-hmm.
So transparency is in fact how we communicate with our clients.
Mm-hmm.
So anytime you send money, we
Mm-hmm.
confirm to you.
Yeah.
On a monthly basis, we send to you your statement by the that day. Actually, we do it on the first, but usually say by the third day of the following month, we send to your statement.
Mm-hmm.
Other than that,
Mm-hmm.
by the 7th of the following month,
Mm-hmm.
we send you the fact sheet.
Mhm.
What is a fact sheet? It just tells you,
Mhm.
Etica, my money market fund, when they lump me up with other people, they're
Yeah.
investing in X, Y, Z. So that openness and the client is not very comfortable. They're like, I know where the money is going.
Mm.
Yes.
You've said your key pillars: customer service and tech.
Yes.
Is there anything else we should know about Etica?
Anything else you know about Etica Capital?
Mm-hmm.
I think maybe something we didn't highlight
Yeah.
is also so there's one segment of the market
Mm-hmm.
that we saw was neglected.
Yeah.
And we are lucky that even as late as last year, we saw another player come into the industry to try and solve that segment of the market. The bottom of the pyramid,
Yeah.
because if you look at it, most of the players had a very high entry level, 5,000, 10,000 likes.
Yeah.
So for us, we put our entry level for our retail products at 100 shillings.
100 bob.
100 shillings,
Mm-hmm.
you can invest anytime,
Yeah.
as many times as you want,
Mm-hmm.
from as little as 100 shillings going forward.
Mm-hmm.
So for that one, it also means that you also need to have very good tech platform,
Yes.
because if you're doing 100 shillings, anybody can be able to open an account from wherever they are.
Yeah.
You also need to have very good customer service. So if you look at it, those three pillars,
Mm-hmm.
they're working together in harmony.
Yeah.
The low entry level enables us to acquire as many clients as possible,
Mm-hmm.
meaning helping people to save and manage their finances in a better way.
Mm-hmm.
And then on top of that, just have good customer service and also have very good tech platform.
Nice.
Yes.
So with my 100 bob, I can start earning
You can
interest.
Start your journey.
Nice.
Yes.
Nice. I love that.
Yeah.
I would like us to go through the process, that whole process. When I give you my money, what happens?
What happens?
Yes.
It's a broad question.
Yeah.
It's a very broad question.
Mm-hmm.
Number one, let's start with defining what is a unit trust fund.
Mm-hmm. Mm-hmm.
So a unit trust fund
Yeah.
is a collective investment scheme.
Mm-hmm.
So a collective investment scheme basically means that the money that you give me as Gertrude,
Yeah.
I will combine you with other people
Mm-hmm.
and invest.
Mm-hmm.
So I will not come,
Mm-hmm.
is that thing that we say, if you come and let's say give me your 100 shillings,
Yeah.
I don't go and say that 100 shillings is invested
Yeah.
alone there.
Mm-hmm.
So I'll combine with other players.
Yeah.
So from that is where, as a fund manager, we usually get what you call bargaining power.
Mm-hmm.
So for example, if you use 100 shillings
Yeah.
and you need to go to the bank to get a deposit rate, they'll tell you the amount is quite low.
Yeah. 100 bob. I can't work with that.
Exactly.
Mhm.
Number two,
Mm.
if you look at even the entry level for some instruments in the market, if you look at T-bills, 100,000, government bonds, 50,000. So for what a fund manager is doing is they combine it together and you get bargaining power. Because I'll combine 100 from other people. At the end of the day, I have like, let's say 10, 20 million. So if I go to a bank and tell them I want to place 20 million, they'll give me a better rate. If I go to the government, now even before I start bidding the rates, I qualify to give them money because I am way above their minimum.
True.
Yes. So if you ask me about the investment process, so a client starts investing, which answers a very interesting question that people ask. When I give you my money, why doesn't it start earning from the same day?
Yeah, why?
Yeah, I think that's a key question that people ask, and it's also been answered by, because see, number one, if you give us money, for you to start earning, I need to invest it. Now the way I like asking, let's say you give me money at 7 p.m. at night. Is there anything I can do with the money?
No.
I can't.
Well,
the market is closed. The bank is closed. So if you give me that money, technically, even if I invest it, I will be eating into other people's returns, the existing people's, because specifically your money itself has not been invested. Right? The same thing applies on weekends. So give me money on Saturday. There's nothing I can do with the money on Sunday. I will have to invest them on Monday. So that's the first logic. When you give us money, we give the following day as a valid date because allows us to scout for investment opportunities. So technically, in the vaccine, now what happens as a house is initially we have what we call a house view. A house view is now as Etica Capital. How do we invest our funds? Are we conservative? Are we aggressive? And the like. So from there, then now when you get the house view, so then it is guided by also the product documentation. So for example, if you take like a money market fund, there are set guidelines from the regulator. So they've told you can only invest in X, Y, and Z. You can't invest in cash deposits, call deposits. You can only do, let's say, commercial papers that are approved by the regulator or even rated, right? Or even if you're investing in long-term instruments like government bonds, the weighted tenure of the fund has to be 18 months. So you see, so there are very many factors. So there's what the regulator has told you. There's what you call the fund IPS.
And
so
what's that?
So investment policy statement. So if I use those terms, you can just slow me down. So it's called an investment policy statement. So it just guides how we are investing for that particular fund. So the first, so if you look at it from the top, there's what the regulation says. So from the regulation, so currently we are working with CIS regulations 2023. They're published in November, gazetted in November 2023. So from that, you come up with your fund, which has to be in line with the regulations. So now even when a client gives us money, so many things can happen. I'll give you an example. Let's say one day you come and give us 500,000, but the same day, Kenyan is withdrawing 500,000. So net in that day, there's nothing much you can do with your money because whatever you gave us, it hits my investment account. By saying from the same investment account, there's an obligation to pay out money. So money will come in and money will also leave. So you look at how the fund is sitting in terms of liquidity. Because you know sometimes if you sit here, you don't want people to come and look for, and come for their money. You're telling them we need time to sell these particular assets. So there's some particular buffer that we keep for liquidity. It's actually between 5 and 10%. So even if you look at our fact sheets, whatever is on cash and call deposits, it's usually between 5 and 10%. It's not for other purpose, it's for liquidity. For the client wants to redeem, they get the money as soon as possible. Yes.
Nice.
Yeah.
Nice. So who chooses what my money will be invested in?
Who chooses what your money will be invested in?
Yes.
So if we start from the top, so we came up with a fund. No, the regulator came up with regulations.
Such as?
So the collective regulations that tell you for money market fund, this is how you should invest. Then we came up with what we call the IPS, the investment policy statement. From then on, now in-house, we do have the portfolio manager. Currently it's me.
Nice.
But the portfolio manager does not work in isolation. So what we do is we have an investment committee. So investment committee reviews all the opportunities in the market. I'll give an example. In the current market, we have many banks, over 30. But we don't invest with other banks.
Sure.
Mainly because we have come up with a rating matrix, whereby the rating matrix, you look at particular elements and particular information you want from the banks. So whoever meets the criteria you're looking for, now you put them on the panel. So put them on the panel, you can invest. So even the portfolio manager, when he's investing, he does not invest solely out of, I think I know someone at this particular bank, let me just send them money. And the next thing from that is, if you look at it, so there's so many opportunities. So there's this what like a filtration process. So you have opportunities, they come to the research team. So the research team will filter them. Some will not meet the criteria, some will meet the criteria. Then from then on, they review the opportunity. Once they review the opportunity, it goes to the investment committee. So the investment committee can either adopt it or reject it. For example, let's put an example. You are an analyst. You've been told we have an equity fund. Someone has told you we want to buy a particular IPO. Let's use an IPO, initial public offering. So that's an opportunity. Let's say we have an equity fund. So you go and look at it. Does it make sense? Then they ask for the financials. They do their projections. Once they come up with their view, whether we can participate, they come to the committee. They tell the committee, now I have evaluated this one based on this matrix, and the recommendation is X or Y. We can participate. People will grill analysts and ask her or him. So where do we play, or what if you adjust this and the like? So now when everybody is convinced, it's adopted as a house, and then now the portfolio manager will just execute.
Oh,
yes.
It's a whole team.
A whole engine. It's a whole engine.
Wow.
Yes, it's a whole engine. You don't just sit and give returns. There's a whole process behind it.
Okay.
Yes.
Nice. Thank you. I never knew that. So, how do you balance safety, liquidity, and returns, specifically for the money market fund?
Safety, liquidity, and returns.
Yes.
I think for liquidity is easy. Because Aaron had mentioned we put a buffer between 5 to 10%. Most of our funds, even if you see we are below 5%, it will be tactical. But strategically, between 5 and 10% of the entire portfolio sits in cash and call deposits. So cash, call deposits, I can recall them anytime. So if any client wants money, they're paid. I'll give you another one, another factor. Most of our clients get paid within 24 hours. Actually, if you look at it, M-Pesa is instant to a limit. Banks are paid within 24 hours. If a client withdraws on a weekday before 12 p.m., there's a 99% chance they'll get the funds by 3 p.m.
Wow.
Yes.
Speed.
If you withdraw on a weekday before 12 p.m., by 3 p.m. you'll have the funds in your account. So in terms of liquidity, there's the mechanism in how we try to play around it. Safety.
Yes.
Safety. If you look at safety, I think I like answering safety in terms of governance. Governance structure of the funds. So governance structure of the funds, because we don't live in isolation. So for example, there's a question I keep. I think I even saw you and you'll ask.
It's okay, go ahead.
Are all money market funds the same? If I put it from a governance perspective, they should be the same. They are the same. So if you look at governance, so you start with the utmost. That's the first level of governance is licensing. Right? So licensing, so you have to get a license from the regulator. So if you get a license, you actually get 2 licenses. So you first of all get a license as a fund manager. So for example, Etica got a license as a fund manager in August 2022, sorry. 2022. You can have a license as a fund manager, but you have no funds. Yes.
Okay.
So then after that is you apply for a license for what you call products. So product is as simple as money market funds is a product. So we went for, now after you got the license, is now when you apply for products.
Mm-hmm.
We apply for products, we got our license in November. So the first level is governance.
Mm-hmm.
So you have the 2 licenses, right?
Yeah.
Then number 2,
Mm-hmm.
there are 3 key players in a fund.
Mm-hmm.
So the first key player is a
Mhm.
custodian. When clients send money, they don't send it to our Etica account.
Mm-hmm. It goes.
They don't send it to our corporate account.
Okay.
They send it to the custodian account.
Oh, and
So
who's
there's
the
that clear
custodian for
demarcation
Etica?
between Etica
Mm-hmm.
and the custodian.
Mm-hmm.
I wish we had done this just before 31st of March. I would have given you an assignment to go and look at it. Because now it's past.
Mm-hmm.
If you look at even how people report,
Mm-hmm.
so you see number 1,
Mm-hmm.
under the regulations, you are regulated.
Mm-hmm.
So how you report is by 3 months after the end of the reporting period,
Mm-hmm.
you need to publish your financials
Yeah.
in the newspapers,
Mm-hmm.
right?
Mm-hmm.
So if you look at how financials are published, you publish 2 ways.
Mhm.
It's what you report as a fund manager,
Mm-hmm.
and then for the products.
Mm-hmm.
So for the products,
Mm-hmm.
so I'll give an example. Most money market funds,
Yeah.
ideally, they don't make losses.
Mm-hmm.
But a fund manager can make a loss because
Mm-hmm.
a fund manager has not a source of income.
Mm-hmm.
The funds will help them grow. So the bigger the funds, the more they can pull as fees, which goes to the company, helps them to run their business.
Mm-hmm.
So if you look at it now, that clear demarcation is, like I'll give an example. For Etica, our corporate account is at IDM,
Mm-hmm.
but our custodian is who? Equity Bank. So clients don't send money to our corporate account.
Mm-hmm.
We are actually paid from the fund,
Mm-hmm.
and the money comes to our corporate account, and we are paid fees on a 1 month arrears basis. So for example, the fees for April
Mm-hmm.
will be paid in May. So the fund will accrue up to the end of April.
Mm-hmm.
The fees are extracted, instruct the custodian, they pay us, as they will pay other service providers. Because the fund has different service providers. So we just started with the custodian. Unfortunately, when we were talking about the custodian, we also spoke about the fund manager. So the fund manager earns management fees. It's a good question people keep asking.
Yeah.
This 2%, what is 2%?
Mm-hmm.
What is the management fee?
Mm-hmm.
So management fee, how management fee usually derived from the total return of the fund.
Mm-hmm.
So if a fund is, you're publishing 14%,
Mm-hmm.
it means the fund was publishing 16%. We knock the 2%, and then 14% we pass to the client. Now the 2%, we pull it and pay ourselves for the work that we are doing. Because see, as a fund manager, you have expenses. You have people you've employed, you have rent you have to pay, you have electricity bill, water bill, internet bill, all the rents to run the business, to keep the business running. So that's why you see, as the funds are growing,
Yeah.
if a fund manager is prudent, you start seeing the revenues are also increasing. But now, so that's when you should see, when the fund is very new, let's say you've got a license,
Yeah.
you actually have no funds to manage.
You have zero.
And technically, you have 0.
Mm-hmm.
If you charge 2% of 0, you'll have nothing.
True.
Right?
Yeah.
So you'll have nothing. And since you'll have nothing,
Mm-hmm.
you'll just be digging into your capital
Mm-hmm.
just until the business gets to a level where now it can help you break even, so that the fees you're deriving are enough to pay your monthly expenses.
Mm-hmm.
So that's the custodian, the fund manager. If you're spoken about the trustee,
Mm-hmm.
so the trustee is just like, I keep saying, it's a prefect.
Mm-hmm.
Because there are rules you have been given by CMA, they're just confirming, do you invest as per the guidelines?
Mm-hmm.
Then on a quarterly basis,
Yeah.
these last 3,
Mhm.
the trustee, the custodian, the fund manager, have a meeting
Mm-hmm.
before the 21st of the following month,
Mm-hmm.
just to review the quarter and see where we are. That's the place where if you have a breach, it is exposed there. They tell you why you're doing this is supposed to be done. So they picked up very early.
Oh.
Yes. So if you look at the governance structure,
Mhm.
so there's custodian, so there's the regulator, CMA,
Yeah.
trustee. So for Etica, it's cooperative bank.
Mm-hmm.
The custodian is equity bank. That's where clients send money. That's where the assets are held.
Mm-hmm.
Then the fund manager and administrator is as Etica Capital.
Mm-hmm.
From then on, you can even enhance it further.
Mm-hmm.
Who is the auditor?
Mm-hmm.
So they say we published financials who are audited,
Mm-hmm.
right? You see, the auditor is also not checking if things are being done in the right way.
Mm-hmm.
So first, we are we actually audited by RSM.
Mm-hmm.
RSM
Which
East
is?
Africa.
And what's that? For you,
Actually,
one of us.
do I even know the full name of RSM?
Okay. Yeah.
I think they are fully called RSM East Africa.
Mm-hmm.
I don't think it's a short form.
Okay.
Yeah.
Mm-hmm.
Then soon after that, you have to do an AGM for unit holders to tell them your funds are performing this way. They ask questions and they're like, so the governance structure is robust. So in terms of safety, there's quite a robust structure. And I'll tell you the truth.
Yeah.
Over the past 5 years or so, CME has really enhanced the governance structure. They even do inspections. They come sit here.
Wow.
Yeah. They even CME was doing inspections last year in the month of I think September, October. So they started close, most fund managers, just to ask you, just to confirm. Yeah, you do even have an office. This person on the website called Kenneth, does he exist? Yeah. Or is it just some responses you have sent on email?
Placeholder.
Yes.
So nice. We have the structure, custodian, trustee, fund manager, or the
auditor, and the like. So in terms of safety, because in terms of safety, it's a bit tricky. Also, I think if you look at safety, but safety of funds, I think it's also key to capture safety of funds as you capture the risk of the fund. And the reason I'm saying that is because you can make losses on investment, but it's not that the fund was not safe. For example, if you invest in an equity fund, an equity fund invests in the stock market, the stock market has a return of negative 20%. Your funds may move from, let's say, 100,000 to 50,000. So it's not about safety of funds. It's just that the risk of the product was a high risk product. Yeah. So there's quite a number. If you ask safety, there are quite a number of factors that you look at. So an investor just making losses, it doesn't mean that the fund is bad.
So it depends
it
on the
depends
product.
also on the particular product. Yes.
Okay.
So if you look at it, money market fund should be a low risk fund. A balanced fund, a balanced fixed income fund should be actually they lie between low. Actually, a fixed income fund lies between low and medium. A balanced fund, because of the element of having equities, goes from medium to high. Because a balanced fund can have both. On the other end, you can have an equity fund. An equity fund is a high risk fund. High risk, high return. Yes.
Nice. I love that. You've not only looked at the fund itself, but also the assets, products as well.
I think it's better to have a wholesome view.
Nice. In terms of the safety of money within the app, how do you ensure safety of investors' money on the app?
On the app?
Yes.
Actually, that's a very good question. Especially because we are in the era where cybersecurity is a thing, yeah? I'll give you an example. I don't know for how long you've walked the journey with us.
Yeah.
If you were here last year, beginning of last year, the way the client used to log into the app, there's no PIN that was required, no token. So basically you created an account and you had a password. So there's no other factor. So if you look at it, you just log in. Now, unfortunately, we have people who number one, do not log out of our emails. Number two, the people who don't log out of our applications. So if you look at the app per se, so the first thing we did was we put a second level of approving. So once you enter your password and then you put your username as the email address and you put your password, you send your PIN, a token on email, which also expires. It's not limitless, right? So that you can use that one. When you're transacting, it does that. Now, as things evolved, you'll see some enhancements here and there. For example, if I was to know your email address, and I know your password, and I try to log in from this site, right? Automatically from wherever you are, you'll get a notification on phone and on email. Usually send you a text message, I send you an email telling you your account has been logged in. So in any case you're like, I was not even on the Etica app. Immediately you just call us and tell us my account has been, someone is logging in. And then from our back end, we just immediately the first thing we usually do is we disable the account. So no one can transact inside the account, right? The other thing is, inside the app, when you're now inside the app, for you to transact, you need to have a PIN. You need to transact using a token. So that one is another thing. we usually have a cybersecurity team
Yeah.
that does tests every other day, and there's a report I usually get daily. So that would be attempted attacks. You can never. The key thing I got from the training, because I also learned,
Yeah.
you can never be foolproof
True.
in terms of cybersecurity. Because you see, the way you as get to wake up and do your business, the way you wake up here and work for Etica Capital, there's someone who wakes up every day to find out new ways of hacking Etica Capital, or hacking a bank, or hacking Safari, or anything. Whenever they feel that there's money, they feel that they can hack.
Yeah.
So it's a real threat, but also what we're trying to do is we're trying to keep enhancing. So they give us recommendations, and then we implement them. In the next maybe 1 or 2 weeks,
Yeah.
there's an update that is going to go live, which will make it a bit safer. Because we try to make it as hard as possible for them to get in. So what usually I keep saying, sometimes someone can hack you, and like, let me clap for you, because then you've really done very well. So you want to make them to get to a level where
they have to try and go.
Try a lot. So it's something we actively monitor on our end. There's a whole team that does that, and a whole platform that checks daily what is happening. And from mine, we can even see the backlog and what people are doing. Yes.
Nice. I love how you shared that. This is what you've done. And
we are actually making it better, because I keep saying what you are told. It's an active threat. Every day there's someone coming up with a new way of trying to hack your account or trying to get funds from the account. I will give maybe one or two tips that I hear from our cybersec team. Number one, rarely do people log out of their emails. For example, if I take your machine, have you logged out of your email or your phone? So anybody who sends tokens to your email, they're able to get it. So even if I was to get your phone, and I know you have an Etica app, I just go request send to email token and everything. Yeah. So we need to be very wary how we use our emails. We are also told not to log into our devices in public areas, because you never know what that machine that you're logging into. For example, if I came and gave you my machine over here and you go work with it, maybe there's a tool I've put in the back end to see they're called key scripts, the typing, whatever you're putting in. So I just go and pass by it and say, okay, so she went to her email, so the email password is this, and then from whatever I can do. So there's so many people things that people do, That's why you keep saying, do not log into your emails or private, not just Etica app, in public places. Avoid using public Wi-Fi's. Another thing. I know we love Wi-Fi's.
Free Wi-Fi.
Yeah. So also avoid logging into the internet on public Wi-Fi. You never know who that public Wi-Fi user, what they're doing. They may be doing it for free, but on the back end, they're harvesting your data.
True.
Yes.
True.
Then the other thing that they keep saying is your password. If you were to be taken, people are to be asked how many times have you repeated your password. You have an Etica account, the password is the same as your bank account, it's the same as your email address.
Yeah.
So technically the day I get hold of one,
you have access to
everything. Right? Another thing, saving passwords on the phone. There are two ways. I can see you are smiling because I think you are guilty. There are two ways. Like people save passwords on the phone. Save it as a contact, save it as a message, save it as a note, save it as something. So basically, if I get your phone, I have your passwords. Right? Number two, there are phones which allow you to save the password. So you log into the Etica app, then immediately you want to save the password. Like save. You jump very fast. I can see you jumping very fast because you do it,
Oh Lord, yes.
Yeah, so the moment you start doing that, so technically, so even if I was to access your phone, we are living in days where things can be stolen in day. So anyone who accesses your phone, you will immediately have access to so much. Because I'm like, the email just has the email and the password.
Everything.
And I'm inside there. So just those tidbits. And we'll try run maybe a campaign just to alert people or just play our part in telling people cybersec matters, avoid this, do this, avoid this, do this, just to make sure people are a bit more comfortable.
So we log out of our emails, don't save your passwords on your notebook or inside your
devices everywhere.
And don't use the same password for everything.
Yeah, but I've given you a challenge. Tell me someone who has logged out of their email.
No.
Show me. Ask your friends who has logged out of their email.
I doubt tutapata hata mmoja.
Exactly.
So what you've said the don'ts. So what should we do instead?
In terms of cybersecurity?
Yes.
Number one, I keep saying public Wi-Fi is a no-go zone. I know it's free, but it's also a no-go zone. In terms of how much they're giving you, you don't know how much they're harvesting from you. They're giving you for free, but there's nothing free, so we all know that. The second thing, in terms of what we can do differently, have a strong password. I'll give you an example. Deal with the space character is one of the strongest elements in a password.
I never knew that. So space.
No,
Okay.
no. Add characters. People don't really use passwords with characters, but from the trainings you get, people who have a space bar, they decrease the chances of being hacked by a virus.
Oh.
Yeah.
Now we know.
No one knows how to use them. Have you ever thought of putting the space bar in a password?
No.
Exactly.
Nice.
So the thing is, make it very hard for them to track you, to even crack that password. Then the third thing, do not share your password with anybody. I know people nowadays are oversharing. I have a issue with people oversharing. You're there, you've gone to some place, you're having fun, then you're telling people, I have an Etica account. You can even log in from your phone. Maybe that what again? Hey, get through password ABCD. Don't shout about your passwords.
Keep
It's
your
called
money
a password.
secret.
It is your secret. No one should be having it. So there's that. So give those ones, but just be on the lookout on our social media pages. We'll be doing something soon. On passwords. I think we have started. The posts that we've done this week are more towards cybersecurity.
Nice.
Yes.
Nice. Thank you so much. I believe those tips, most of us are tunajua, and we're guilty of making those mistakes. Thank you. I'd like to take you back to interest rates. So when interest rates go up, go down, does it affect the returns that I'm getting as an investor on Etica?
They do. I'll give you an example. So over the past 2 years, 2+ years, we are in what we call a high interest rate regime or environment. So if you look at the last 2 years, rates were going up on a weekly basis.
Sure.
So meaning that we don't live in isolation. Meaning that the assets that we buy, whenever we are buying, you could get better returns. On that note, let me give you maybe something people are asking. So see when CMA over the last 3-4 years, just digress a bit. For the last 3-4 years, CMA was very good, has been giving out licenses to very many players. So even Etica was among the guys who benefited from that. So the licenses that we got, so most of these players who are coming on board, like Etica came on board when the rates were very high. So even any new money you are getting, we're always investing in high returns. That's why you could see even when the rankings were being done by people who are doing them, the people on top, not just Etica, were new fund managers, because they came when rates were very high. Now, the challenge you usually have is, for an existing fund manager, you're not able to reprice, because you had bought assets at low yields. You can't sell them, because if you sell them, there's this concept or theory in finance and economics, where when the rates go up, the value of your bond goes down. Meaning that if that fund manager wanted to sell a bond, they would have made a loss. Now, you and I know, my market funds will not make losses.
So they will just hold them.
So the moment the moment would have been, so the money cannot make a loss. So if they cannot make a loss, so the other option would be the company to inject its own money to fill up for the loss. You get? But now, the company is not in the business of, because if the company does that, it will start suffering. Because you just take money to compensate the fund. So that's why legacy funds, which are especially big funds, they had an issue. So they were repricing, but at a very slow rate. Because you wait for new money and wait for coupons or maturities. But this new guy who's just come to the market, Him, he came and he was like 16 is there.
16, 18.
16, 18, there's not much. So the flip would have happened. So if rates were at 18, I don't know if these new fund managers got rates when now they're below 10, we'd have a problem. Because any new asset they're buying in the current, let's say the current environment, is low. So the first day you go for pricing, you have a low return. People will ask you, you are new, why can't you be like these people are old? Why don't you know what you're doing? But it's a matter of how the rates are in the market, right? So now back to your question, how do rates? So you see, we don't live in isolation.
Yes.
Let's look at where can a money market fund invest into? Cash and bond deposits, fixed deposits, T-bills, some bonds, some commercial papers. So when rates are very good, all these guys are up. So it's buying them at high rates.
Yeah.
When they start coming down, so what I need people to understand is when I buy an asset at 18%, and so for funds like money market funds, they're supposed to amortize, basically holding to maturity. You never sell it. You hold it at 18%. Even if rates come down to 10, it never changes its yield. Same way for fixed deposit. If you bought it at 18 and the following day banks are doing at 10, they leave it until you mature. So you get. So there's something where people say, oh, rates are coming down, why not coming down? It's because I bought assets which are earning high already, and we're not supposed to sell them.
Yeah.
Right?
And why would you?
And why would you sell your best asset? So you see, so rates are high, and also rates are low. So right now, since last year around November, we are in an environment where rates are coming down. So T-bills we are peaked at 16%. I think today we get results at around 8%. CBK is still dropping the rates further.
Yeah.
The reference rate is coming further down. So meaning that even now when I go for a bank deposit, they will revise. I'll give you an example yesterday.
Yeah.
So on every Monday, majority of the banks in the country, they send interest rates returns to fund managers. So we get them. So this week on Monday we received rates. Yesterday for CBK announced CBR was down. These guys revised the rates downwards by 1%. Meaning that now when I go to invest the money for funds now, we are getting a worse return than before. So that's why you're seeing the returns are coming off. Yeah.
Okay. So when interest rates are high, returns
Returns may favor the investor. Yes.
Nice. So how do you handle economic times of uncertainty? How do you handle that?
So, and there's something we're discussing.
Yeah.
So there's something we call, so there's what you get as the guidelines from the regulator. Then what you have on the fund statement, investment policy statement. There's what we call the strategic allocation and tactical. So tactical you can play. So if you look at all our information memorandums for all the funds, the tactical play, some of the securities can be from 0%, meaning that if I have a negative outlook, I can go to 0.
Okay.
So for example, let me give you an example. You have a fund.
Yes.
It's supposed to invest in equities. They've told you minimum you should invest is 60%. Right? So in a good season when you're expecting returns to be very good, you can max out up to 80% or up to 100%. Right? Because you want to get the best returns.
Yeah.
But if now in an environment where, let's say what Trump is trying to do, and things are you're just seeing red all over. So your outlook is negative. Right? So you would reduce that allocation to the bare minimum.
60.
Mainly because you want to protect your investors as much as you can as a player. So I'll give you another example. There's some funds where the tactical play can be 0 to 100%. Meaning that for this particular asset class, let's say, let's give an example. Let's say commercial papers. So commercial papers is when a fund manager is lending to a private entity for a period of time, typically less than 1 year. So if these commercial papers are struggling, I can go to 0.
Sell them off.
Sell, exit. They mature, you exit. I'm at 0%. So when you're at 0%, it's now tactical play. So see when the economy is swinging, you're also adjusting your portfolio. And that's why I can give you something. The investment committee sits on a weekly basis. Mainly because there are always opportunities and there are always threats.
Yes.
Basis. Yes.
Okay.
Yes.
Nice. So, in terms of managing the fund, what's the biggest challenge?
In terms of managing the fund.
Yes.
So that question, is it for Kenyans as a portfolio manager or is it for Etica as a fund manager?
You can answer it in any way.
I think the element of balancing risk versus return and also including liquidity.
Okay.
So you need to balance risk and return while also maximizing the return and enhancing liquidity. Let's say we have a liquidity fund. You know, first quarter of this year, let's perform markets perform very well. So you be a bit, you don't want to be greedy and put so much money in equities.
Everything there.
But also the flip side, what if client comes and says, I want to withdraw everything? Will I be able to pay? Because there's a quote I'll paraphrase it by one James Bond. He said the biggest challenge you can have is liquidity challenge. What are the challenges? But never face a liquidity challenge.
Have to have cash.
Yeah, never face a liquidity challenge. Even for banks.
Yeah.
What costs just bank to run?
Lack of money.
A liquidity challenge.
Yeah.
Or even the others.
Yeah.
You get. So even for a fund manager, despite not having the funds here, allocate money for liquidity. So anybody who wants to exit, they can exit. Yeah. The biggest challenge you can have is a liquidity challenge. Yes.
So as long as you maintain the 5 to 10%, you're good.
Yes. So the day get to this guy for her money, she not complain. Yes.
Okay, nice. Have there been any cases where you need to change the strategy? You were doing this and then all of a sudden things change, therefore you have to change your strategy.
The instances have been there because of factors out of your maybe control sometimes, and some factors are in-house because we have quarterly strategy sessions for all the funds. So it's based on the outlook. You know, when the tool is an investor committee. The committee comprises of the research analysts, the portfolio managers, the person who is trading, and also the CEO sits and the risk and compliance sits. Mainly because everything has to be, there's that risk element towards it. So there's sometimes maybe you would say, I'll give you an example. You know, the shilling was weakening like on a daily basis.
Yes, 160.
It went to 160. Right? The easiest thing, you would have converted even money to dollars and
made your money.
Right? Now on the flip side, when the shilling started reversing, you would have to immediately change your strategy because maybe your liabilities are in cash shilling. I'm just giving an example. So changing of strategies among fund managers happens because the outlook may change. Let's say, for example, even this week, the last 3 days, I'm sure even globally some fund managers suffered. Because a tariff is issued, then you're like, your outlook now is negative. I was reading an article where I think Boeing is a US company, but I think only less than 10% of the parts are from the US. So everything is being imported. So that means that anybody buying a Boeing plane, the cost has shot.
Because of the tariff.
So if let's say Etica was in the aviation industry, you'd have to think, we still go for Boeing or now we change to Airbus?
You have to make the decision fast.
You have to make the decision fast. But I think most of us have a challenge where we have a decision but we don't want to execute it. That's one of the things one of my first bosses told me. The difference between a good plan and a great plan is execution. Some people have good plans but they don't execute. So it remains as a
plan.
Exactly.
And in this business you have to be executing.
You have to be executing. You don't want the market to beat you. Maybe another example, just as we wind up that one happened. Back then, some years ago, when there was that rate cap, 2016, 2017 there was. So rate cap had a negative effect. So meaning that if you are holding, most fund managers were like, let me exit. because things now, the outlook does not look good.
Mm-hmm.
So just exit.
Mm-hmm.
People are selling, there's a massive sell off.
Mm-hmm.
You used to wake up and see red.
Everyone is selling.
Everyone is selling. Yeah. So changing the strategy, because every week we're analyzing how everything is going, just to make sure that you have the interest of the client, the customer, the best interest at heart.
Nice.
Yes.
Nice. So we've come to the common investor questions.
Common investor questions.
Yes, and myths. So, true or false?
So am I supposed to
Yes,
explain?
you can.
Okay. You know, it's true or false. If you say false,
You can explain.
Okay.
So, fund managers can use my money for their personal investments. True or false?
That is false. Mainly, there's that clear demarcation. So, you as a client, you send money to the custodian, and the custodian, even for our end, is of the corporate account. So there are two different accounts. The custodian is the equity bank, our corporate account sits elsewhere. We are paid fees from that. I'll even tell you something better. Once you incorporate a fund, the owner of the fund becomes a trustee, not Etica Capital. So when Etica Capital was to go into problems, they will just take the fund and assign a new fund manager.
Oh.
Yes.
So,
They can
as an investor, my money will continue earning more.
Yes.
Okay.
If the company had a problem, they'll just take the funds. They just go through the process. You can be fired by the trustee, by the fund manager, and they hire someone else to do your work. You started very well, but now you're not doing well.
Okay, nice. That's interesting. True or false? Money market funds invest in stocks.
False.
What?
False.
It's an easy one.
No. Money market funds, they only invest in interest-bearing instruments, which will be cash deposits, called deposits, government securities, could be TBs or T-bonds, short-term that is. And then we have what we call approved or written commercial papers. So we don't just go for any commercial paper. They have to be approved by CMA, guaranteed or rated by the accredited rating agency. So if you look at maybe for the fund structures, there's the basic 4 funds that CMA gives a license, which are not special funds. The first one is a money market fund. Second one is a fixed income fund. That one is a balanced fund. So the balanced fund, the one says balanced because it has both. So money market fund, fixed income, they only do fixed income instruments. And fixed income instruments is because they pay interest on a periodical basis, either on maturity or a prescribed period, like bonds pay interest after 182 days. Now, if you come down to balanced fund, has an element of both fixed income instruments and also equities. Then I go to an equity fund, which purely plays with equities. So those are the basic funds. Then after that, you can get a special fund.
Oh,
Yes.
nice. And is Etica planning on getting a special fund?
Watch this space.
Okay.
Yes, yes, yeah.
Nice. Can't wait. So, true or false? All money market funds in Kenya work the same.
That one is, can I say it's a true and false question? Because I say true. When I say true, it's because the governance structure is the same. The governance structure, the reporting mandates are the same. So basically, from the regulation perspective, it's the same.
Okay.
But when I say false, it's because as Etica Capital, there's a way we treat our money market fund than another person. So, an example, you may find a house, an investment house says we cannot touch commercial papers at all. Right? So meaning, though the regulators told you can do up to 10%, then they have said for us,
It's a no.
it's a no. Or for example, someone can say, for me, our money market fund cannot invest in government bonds.
Okay.
Though you're told weighted tenure of the fund is 18 months and below, someone says we cannot invest in government bonds, we cannot do T-bills, commercial papers, and maybe bank securities, bank deposits. So you see that's different,
Yeah.
right? So it's true and false. In terms of governance, it's exactly the same. So even if my reporting mandate is by the 21st, everybody reports on the 21st across the divide
Yeah.
for all fund managers. But now execution in line with the regulations may be different. There are fund managers who don't do commercial papers. There are people who their portfolio, you look at their fact sheet. It only does cash deposit and call deposits only. So it depends on the house view that they have adopted.
Nice.
Yes.
True or false? Returns on money market funds are guaranteed every month.
So your enemies have sent you. My enemies have sent you. No. I'll give you, so for all unit trust funds, there's no guaranteed return. For all of them. Because it's a money market fund, it's a fixed income fund, whether it's a what, it's not guaranteed.
No.
And I'll even give you another disclaimer that you're supposed to give by the CMA. CMA says very well, you cannot guarantee returns to clients.
Regardless of the risk.
Let me give you a logic. Let's say you are managing Etica Capital funds, trust funds, and you place money with a bank. How sure are you that you get the money back?
50-50 chance.
Exactly. So why are you guaranteeing a client yet why you're taking the money?
Yeah.
Let's say even if you invest with the biggest bank, the best performing bank in Kenya, are you 100% sure that they're doing the right thing?
No.
So why would you guarantee based on something you don't know?
Okay.
Yeah.
That's
So
fair.
returns are not guaranteed across the divide. So the only thing we can show you is past historical actual numbers. So come and tell you, I cannot guarantee a return, but I can tell you, last year my return was this, or last month our return was X, or last quarter. So that's why you see our fact sheet. We put the returns there, just to say we cannot tell you how the future looks like, but we can tell you how the past has been. Yes.
Okay. So, true or false? Money market funds are only for the rich.
No. The narrative, let me put it this way.
Yeah.
Depends on the intended purpose you're trying to pursue. There's a narrative that people think that you can get rich from money market funds. Unfortunately, money market fund is a low risk investment, and low risk has low returns. So even when you're doing your whole investments as a person, diversify your investments. Don't just do money market funds. I keep saying, money market funds can be used for parking money. You get money, put it there. You want to travel you want to travel X on a particular day, you start saving consistently. You want to pay school fees, back it there. It's earning something. And it's not in a bank where you can go chuck the money and start using. You'll be seeing this one is for a particular purpose, right? So they're not for with a lot of money again. So people say it's for with a lot of money because of the logic that they keep saying, oh, for you to make money, you need to have X amount because maybe if I put 1 million, 10%, that's when I'll get 100,000.
Yeah, per
Right?
year.
Per year. My logic is usually very simple. I say people like us as Etica, we started from as low as 100 shillings because we want to help people inculcate that savings culture. Kenya, we have a terrible saving culture. It's terrible. We don't. So we help people save, right? You start saving, you start earning good returns, right? Slowly you start earning, slowly. There's that example, maybe one day you can show people that graphic here.
Yeah.
An example of a person who saves 100 shillings every day, but does not invest.
Yeah.
Or no, every month, but does not invest. So you do, let's say do 100 times 12, you do let's say for 20 years. And then the same person, actually I can even pull it for you here. Let me do the maths. So
Okay.
So let's say you do 100,000.
Yeah.
You are doing 100 shillings every day.
Yeah.
Or you're doing 1,000 shillings per month. Yeah? Monthly top up, you're doing 1,000. Interest rate, let's go be a minimum 10%. 10%. Yeah. How many years? 20 years. So a person doing an initial amount of 1,000 shillings, a top up of 1,000 per month, interest rate is 10 for 20 years. Yeah. Then they're getting, at the end of it all, they'll contribute to 41,000, but the fund will be worth 773,000. So if you compare that person to the person who just saves, so if you just put your money aside in the bank, earning zero, you'll be having to 41,000. at the end of 20 years. Or to 40,000. But the person who is investing earning 10%, will be having 73,000.
Over 500,000.
Or 500,000 on top because of what? Compounding. Yes.
Interest on top.
So there's no little money.
Yeah. Nice.
Yes.
So there's this challenge we are doing this year.
Yeah.
That is the 100K savings challenge, whereby we are saving 100,000 by the end of 2025.
By individual?
Yes, per person.
Okay.
So what's the best strategy for a person who's participating in the 100K savings challenge?
100K savings challenge, yeah?
Yeah.
Interesting. Number one, that's a very good initiative. And I love it because you start with 100,000, next time you guys will start saying magical numbers here. No, this is the beauty of savings. I keep saying the beauty of savings is the moment you start doing it, it should be like an addiction. Start building,
Yeah.
So the first thing, discipline. Discipline. So if you say you are going to contribute X amount on a particular frequency, be consistent.
Yeah.
Do that. So there's that thing where you start falling off and the like. So that discipline of consistently doing it.
Yeah.
I keep saying, invest first before you pay yourself. Invest first before you start spending. Right? And the second part is, unfortunately, we are in a place where the transaction costs are a bit high.
True.
So choose the most efficient way of saving. Because the sometimes you put money, but the cost of putting the money is too high. It will take so many days for you to recover the cost itself. People don't do that. Actually, another thing which I will advocate for maybe you to engage people on, let people track costs of transactions they do on a monthly basis. I'll tell you, I did for 2 months and I was tired.
You were tired?
Yes.
How much was it?
No, I will not say.
Just that bad.
Yes. So you see, you go buy in the supermarket, there's a cost there. Put it. And I keep saying, so for me, what I do, personally, I have an Excel for all the spending. And then I have a tab, which is for expenses, for bank charges. So bank charges could to certain charges, yeah? So once I'm done, I'll see I've spent X amount. Then I look at the fees. How much did I use to spend X amount? My rule of thumb, if it's more than 2%, mine.
Yeah.
It's more than 2%, things are not heading in the right direction.
Yeah.
So back to it. So look for an efficient way of investing or putting your money on board.
Yeah.
The third thing is be consistent with who is investing for you. Don't, you know that thing where you're investing here, then tomorrow you remove the money, take it elsewhere. I think trust the person who is investing for you. Make a decision and move with it.
Yeah.
Mainly because this point of taking money from here to here, you lose money, you lose validates, and then moving money here, you transfer maybe 10,000 here, then you feel like I think I need to pay 1,000, so you transfer less to this other new person, it's 9,000.
Yeah.
So avoid unnecessary movement of the funds, right? The last thing I would say, accountability. If you say you're doing the 100,000 shillings challenge, please, when you get an accountability partner, I know you're doing a good job in asking them, have you guys put money?
Yes, I am.
Yeah, get that one, because sometimes we fall off because we don't have an accountability partner. I'm trying to put money, but maybe I can skip this month. Next time when I pay the bonus, I'll add it to that one. No. I'm telling you, you need to pay now. Then the bonus will add it to it. Because the other thing I keep saying is, these random cash flows that you get, use them to boost your savings.
Nice.
So, for example, be in the period where banks are, people are being paid bonuses and the like. Sure, don't spend everything.
Yeah.
If you're doing 100K challenge, I can give it a boost. It becomes 120K. I've gotten a bonus, push it there, and then it's the same.
Nice.
I think I keep saying also, my policy in life, always celebrate yourself. So no matter how much you are saving and investing, always create time and money for yourself.
Nice.
Yes.
So you balance investing
Balance both.
and
Yes.
nice.
Yeah.
There's something that I read on your website. Is it true that I can deposit into my Etica Money Market Fund account direct from Equity without any charges?
So what we've done is we have integrated with Equity Bank channels. So technically, even if you go to an Equity Bank agent, you can deposit your money instant and get a business confirmation. Yeah, I think we, as we're discussing this, we have not highlighted how people can put money and also exit. And it's a good thing. We can just discuss it now. Yeah. So when you create an account, immediately you get an email from us, which gives you 3 options. The first one is bank, how you can do it via bank. Second one is how you can do it via M-Pesa, because we have a pay bill and your account number. And I keep saying, so long as I know the account number, anybody can top up your account. As long as they know your account number. So when someone is paying you money, you tell them, don't send to me, then I send to Etica. This is my pay bill and this is everything. Once they do it, you just get an email on your phone. And you save the transaction cost as you are talking about it. Now the last thing is what we call Equity Bank channels. So Equity Bank channels is need an integration with Equity Bank. So if you go to any equity agent, bank, everything, just say you're putting money in Etica, they'll ask you for a client code. It's done very well because if you say your client code, and you put it in the system, it will pull your name. Yeah, then you put money. Yes. So I think we are aware. There's the cost of transferring funds is a bit high. But it's not within our control. Because some levies being charged by banks. Let's say you're doing an RTGS from your bank charges me 500 shillings. Like that's the cost. Even if I'm not investing, even if I'm taking money to anybody, even if let's say I'm paying get you, and I'm paying you that RTGS. So if it's PesaLink, there's the PesaLink bands. So actually, if you look at it, I keep saying, if you want to do a bank transfer, maybe choose I'm not paid by PesaLink, but PesaLink is cheaper than RTGS by like 400 shillings or something. It will be a cheaper way for you to be more convenient. Yeah, be more efficient in terms of costs for investing.
Nice.
Yeah.
I'd like to take you back to when you're saving. Should people withdraw money often, or should they just leave it for it to compound?
I think we leave it to compound. No, I don't think it's true.
Yeah.
Let it compound. We compound on a daily basis. So the movement in and out may affect your returns. For example, if let's say we start with 100,000 today, but you keep moving the money to pay for something, then you return them out. I may at the end of the year, I may get more than you, mainly because my funds have been there. Same thing. A client will ask, what's the difference between me putting 100,000 now and putting 20. Let's say 20 today, 20 next week there, and I have the funds. Same thing. If you do 100 now, it starts earning immediately. If you start doing in phases, they will just add when they come on board. So in terms of the compounding, it will be much less than the guy who started from the onset with a bulk amount.
Nice. So what's one mistake investors make with money market funds? One huge mistake.
One huge mistake.
Yeah.
This one is I think this one is more of a personal experience.
Yeah.
Towards for Etica. I think the biggest challenge was the high returns that were being published, people chasing return, and not understanding the cycles of interests. So when rates are coming down, people don't understand. So the biggest challenge is you put in funds, but you don't know the cycles. So rates may come down, and you're like, why are rates coming down?
Yeah.
And now it's bad when maybe you're adding even more money. So you're telling me I'm adding more money, but my return is coming down. But it's just understanding the cycles. The second thing is just more about investor knowledge. It's a big challenge because people put in money, but they don't know the risks surrounding that particular fund. So it's more about just try to learn more about whatever you're investing into, especially now that there's so many fund managers and there's so many products. I appreciate what is being done online. So many things you can get. You can see investments, you can see how people are growing, you can see which funds are there. So you see if a particular one is being mentioned, you see people's opinions. So do your research, you'll see what people are talking about. Yes.
Nice.
Same thing, even when Etica was new, people were asking, are you legit?
Why are you giving such high returns?
So when you ask me that, then you give us a call, then we explain to you, and then you're comfortable before you put in your money.
Nice. So, what's one thing money market funds do better than banks?
Than banks.
Yeah.
I don't know why you're putting on the spot. I'll tell you one thing.
Mm-hmm.
In this finance space,
Mm-hmm.
everyone exists for a particular purpose.
Mm-hmm.
Because
Mm-hmm.
we have banks,
Mm-hmm.
they have a purpose,
Mm-hmm.
we have circles, we have money market funds,
Mm-hmm.
and the like.
Mm-hmm.
So what we do and what banks do is what banks do that we can't do. For example, I can't give you a loan.
Mm-hmm.
We don't, fund managers don't give loans.
Mm-hmm.
We are purely investment products. Banks, on the other flip side, they can give you a loan.
Mm-hmm.
So on this side, then if what I am doing better than the bank in terms of returns,
Mm-hmm.
most funds are able to give a better return at a lower entry level than a bank would do. If you have 1,000 shillings, the bank will not accept that deposit. But if you go through a vehicle like a money market fund, you'll still access the call deposit, but lapped up with other instruments and other people, right? So there's that element, whereby everybody exists for a reason. Same thing for Sacco. Sacco exists there, they give you 3 times your savings, or 3 to 6 times your savings, depending on the Sacco. So I keep saying the industry is young across the divide, and we can grow more and more because each player has a role to play. There's what you're doing as fund managers, there's what banks are doing, there's what insurance people are doing, and also there's what Saccos are doing. Yes, on high level.
But in terms of interest, money market.
they do give a better return.
Yeah.
Yes, that's for sure.
Okay.
Yeah.
Okay. So, what's one thing you wish Kenyans knew about money market funds?
The one thing I wish people knew about money market funds is use a money market fund to help you grow your savings culture as a person, as an individual, to help you start achieving that savings culture. The next thing, money market funds are not for the rich. You've heard that as from as low as 100 shillings, Etica Capital can help you invest. On the flip side, understand there are very different money market funds in the industry and very many players in the industry. So do your research and you're going to understand better.
Okay.
Yes.
Nice. If there was one thing that Kenyans misunderstand about money market funds, what's that one thing?
Guaranteed returns. Guaranteed returns. Yeah.
Nice.
People think money market funds have a guaranteed return. They don't. Yes. They are priced on a daily basis. Yes.
So past performance does not guarantee future
does not
returns.
guarantee you. And you see, a money market fund is an open fund. So when Kenneth is exiting, you're coming on board.
Yeah.
So the components of the fund are changing. Now, here I'm talking about 2 people. Now think about a fund which has like 150,000 clients. So the changes in the fund on a daily basis are many because people have their needs. You have your 1 million there, but you want to remove 500,000. Or the flip side, someone else is coming and putting 20k. So the fund is changing daily.
Yeah.
And since the fund is changing daily, the returns will also change daily. Yeah.
Nice. Quick fire round session. Are you ready? So, about Etica, what's the gender? Female, male number?
Employees or clients?
Clients, we'll start with clients. Yeah.
That is interesting. 55-45 in favor of men.
55?
Yeah, you can see your disappointment.
Whatever.
Yeah, it's 55-45 in favor of men.
Okay.
Yes.
Okay. Employees?
Employees, I would say 60-40. No. 65-35 in favor of women.
65.
Yeah.
Nice.
Okay, ladies. Yeah, 65-35 in favor of ladies.
And back to the clients. Who have more money?
Okay, let's not put about money. So we are like I think 196,000 clients. So below 30, below 30 is 55%. Below 35 is 70. Yes. Then above 35 is now the 30%.
Okay.
So some Gen Z.
Okay, you've touched on the age. What's the age of the youngest client?
That one is hard
Mhm.
because the account types are different. So
Mhm.
we also allow minors to open accounts.
Oh.
Parents can open accounts for minors,
Mhm.
but they provide the KYC for parents
Mhm.
and the birth certificate for minors.
Mhm.
So legally it's 18,
Mhm.
but a parent is allowed to open an account for a minor.
Mhm.
So we've had instances where a baby is born and they already have an account.
Eish.
Yeah.
A
People,
baby is
people, are
born
doing,
in-
people are doing great things out there.
Okay. Okay. And what has been the performance of Etica with the fund?
Performance in terms of?
Assets under management, how have the returns been, etc.
So I would say 2024 was the growth year for Etica. December, actually we started January below 300 million in asset under management last year. We closed last year at around 6.6 B.
Wow.
So last year we grew by around 6.3 B, thereabouts. And those numbers are verifiable from CMB website. Q1 2025 has been phenomenal on our side. We've grown by more than 50%. Some are 10 Bs away.
Eish. Okay. Nice. Wow. And the total number of clients?
This year 61,000 new clients. So total number of clients 193,000. The biggest challenge is there are some clients who are idle. They open an account and they didn't put funds. So we're just trying to see how we can activate those accounts. But this year 61,000 new clients.
Wow.
So we do around between 500 and 800 clients a day.
Nice.
Technology.
Eish. Okay. And how have the returns been so far since?
Returns have come off. If you look at, so we publish a fact sheet on a monthly basis. If you check the fact sheet on the website, you'll see I think money market average return was around 14.3 thereabouts. Last year we were doing 16 to 18%.
Yeah,
so rates have
you
come
saw
off.
that.
Fixed income fund around 13% return. So rates have come off. Then the special wealth fund, which is the one for high net worth individuals, has also come down from 16 to around 14. So if you look at average, most of our products are playing between 13 and 14%. But also the outlook is not that good, so we still expect rates to come down. Yes.
Okay. Thank you so much for giving us the time.
No, much welcome.
Do you have a parting shot for us?
So for the clients, for everybody listening or watching.
Yes.
Okay, so I think thanks a lot for having us. I know it's been a long time coming, asking about who is Etica. Finally, we hope you've answered all the questions. My best quote comes from Wangari Maathai. The best time to plant a tree was 10 years ago. The next best time is today. So I'll just rephrase it for investments. The best time to start saving or investing was years ago. The next best time is as from today.
So start now.
Start now.
Thank you so much, Kenneth.
Much
And that's it for this week's series on Ask the Experts. If you've not hit that subscribe button, what are you waiting for? Leave your questions in the comment section below, and remember to join the 100K savings challenge, whereby we are using Etica Money Market Fund account. And we'll see you in the next one.